How you doing, man? Nice to meet you.
Doing excellent, man. Nice to meet you, Dwayne. Thank you for coming on. I want to introduce
For
you to
having me.
everybody here. So, Dwayne is the founder of Liqwid Finance, which is going to be the first
Yes.
decentralized finance platform built on top of Cardano. We got Big Pay in the chat, so shout out to Big Pay. I watched
Love
his
it.
interview with you as well. And thank you so much for coming on, man.
Yeah,
I kind of want to start with like introducing yourself to everybody, how you got in to
sure.
cryptocurrency and stuff. Where are you?
Yeah.
Where are you currently located, and where'd you grow up?
Yeah. Shout out to Big Pay. Great guy. So currently located in Philadelphia, grew up in South Florida, went to school outside of Boston, Holy Cross, went to business school in England. So yeah, I've done my rounds around the East Coast and, went to England for a year to do some finance and B school. This was like 2017, 2018. This is really when I was going down that crypto rabbit hole, actually. Um, and I just remember, doing my early research, fall of 2017, looking at all the smart contract platforms, really just Ethereum was doing, meaningful work in terms of like having protocols build. Aave was doing some early things with ETH back then. And just kind of seeing what the early DeFi space kind of looked like. There were still just order book dexes, ETH Delta, like there were still very like, you know, just immature kind of protocols that were trying to do things that were just way ahead of their time with what Ethereum had built out in terms of its infrastructure at that time. But you could see that DeFi was definitely going to become something even in those early days. And, Cardano had none of this functionality at the time, and we're still just kind of rolling it all out. But I mean, you could tell just looking at the team behind Cardano, the research approach, the type of formal methods and verification that went into the code, just talking about the Cardano method and the UTXO model, and we can kind of dig into what all that means and how it kind of stacks up against Ethereum and some of these other protocols. But it was clear from just even the early days, just doing my research, that if Ethereum and Bitcoin were going to be dominant protocols, there's no way Cardano couldn't, also be in that conversation. So I was just, made a pretty big bet, and I was pretty, just like a broke college student, trying to get his first consulting gig, first finance gig at the time, really trying to inform people about what Cardano was, even back, when we were down however much percent in the depths of the bear market, because I had conviction in the bet that I'd made. I didn't need to have, the day prices reflect that. I had a low time preference. I understand what happens over the course of, actual years and not just months in terms of this space maturing, in terms of Cardano emerging as like one of the top protocols. It was kind of like, the vision has been set, the seed was planted in, 2017, and now it's, we're starting to see the first fruit try to, bear from that. But it's exciting. It's a process. We're still not there yet. Liquid is still just, the first, in terms of trying to do things like build a DeFi design space on the UTXO model, and build a way to do these things efficiently on Cardano. And it's a very different setup than what you would see in an Ethereum, Solidity contract. And there's many things that we get, assurance, resource determination, security guarantees, cost savings, like all things that you'd really want to get and build on. But being the first in terms of like, the first open source liquidity protocol for lending, and trying to build out a design pattern that's like, very efficient and robust, is going to make what we're doing as the first, a little harder. And we've kind of ran into some of these, early hurdles of like, okay, how do we set up these different contracts to interact? And, how can we get IOHK to answer this one technical question we have, right? And I think teams that are coming after us are going to see like, hey, the design patterns, the models of what really works in terms of setting up these Plutus contracts, a lot of these early teams have kind of already sorted out for us, in the same way that, the early Ethereum teams had to, sort out for the teams that came after them, like Sani and ETH before it turned into Aave, right? And the early compound guys like, MakerDAO, all these teams that were just super early in the Ethereum DeFi space, they kind of set the tone for like what the design patterns you would build, secondary, third, product offerings on top of their essential, their stack, their SDKs and their model, how they set up their initial contracts, right? So we're kind of going through that same process on Cardano. I don't even know if there's like an official DEX that's been announced from IOHK or Emergo yet, but I'm sure like in short time that'll come. A stable coin will come. Liquid's trying to be the first, lending solution, because there's a DeFi stack that has to be built out in any of these public blockchains. It's swapping, it's asset management, it's insurance, it's lending. It's all of these things that you kind of just need to have if you're going to say, okay, we're going to try to go rebuild some things in traditional finance. But Yeah,
Absolutely.
I'm happy to field questions.
Absolutely, man. That was a great little start up to it, and we actually covered like a quick chunk of my beginning questions there, just getting through the basics. So that was great.
Sure.
You got why is Cardano? We basically kind of a little bit into what is decentralized finance. I was doing a deep
Yeah.
dive myself on some of the other interviews you've done around and just trying to learn about it. And I got very interested into like how you were talking about how right like on Ethereum right now it's impossible to almost bring decentralized finance to places like Africa and other countries and stuff like
Right.
that. And how do you see like Cardano? What's the difference between Ethereum and Cardano and the way transactions work that's going to allow us to have those lower fees and
Sure.
kind of bring this to the rest of the market? Because Ethereum, as big as it's gotten, there's a whole world still out there, that it's got to get brought to.
Yeah, no, 100%. I mean, Ethereum and honestly any blockchain up to this point, we've seen like in terms of the global internet penetration or mobile phone penetration. You talk about places like Africa and West Africa and how digital they've gone. Like there's a very fraction of a percent is using Ethereum dApps to do things, right? You
Right.
mentioned the first thing. The cost is just like it's at this point ridiculous even for like normal people to use Ethereum. If you're not putting in thousands of dollars into one of these DeFi dApps and you can reason with $100 gas fee or computation costs, then that's the only way to like even use Ethereum and be able to sleep at night, essentially, in my opinion, right now. So there's multiple things here, right? The Ethereum gas fee model, I think we all agree, is pretty broken, right? The way that miners basically bid on the highest fee transactions to make sure those get settled on the chain quickest, it just creates a really bad model for app builders, for end users. It's a terrible system for everyone in Ethereum, but the miners, but the people who are getting paid these transaction costs and fees, right? So that's the first thing. And part of like their switch with one of the recent Ethereum improvement proposals, I think it's 1559, is to start doing fee burning and try to do something that's a little bit more resource deterministic. Actually, not too different than what Cardano has in its stack for how we do transactions and the costing of transactions. There's basically a set amount. There's like a constant in each Cardano transaction, and then the byte size of it, increases basically some multiplier of the cost. Most transactions in Cardano are like 0.17, 0.18 ADA at this point, which yeah, it's like not too bad right now. It'll get more expensive as the price of ADA goes up, right? And there definitely needs to be a more kind of dynamic, almost pricing model, I think, for Cardano transaction fees and things like that. And Charles has talked about this on AMAs, and I'm sure it's something that they're thinking a lot about at IOHK, and I'm sure the community is, and some SIPs will get introduced, Cardano improvement proposals to try to change these things in the future, especially as the price of ADA gets too high, because you don't want a system that's just static to the price, right? You want a system that can reflect maybe both the price and the volume, the actual, congestion on the chain at any given time, because, you know, transaction fees should be lower when less people are using the blockchain. There's no reason to just make everyone pay the same amount always. Like that's not a very robust model, in my opinion, and I think most people would agree with that. So there's things that you can do with Cardano's UTXO resource deterministic, path that you really can't, try to implement at all in Ethereum account style, model. So it's one just like a more functional way to do transactions, because you can do a lot of the kind of simulations, whether it's a smart contract to see exactly how the code's going to execute on the blockchain, whether it's a resource like in your Daedalus wallet when you know exactly how much you're going to spend on any given transaction that you're sending right now, whether it has metadata or just a normal send from you to me, or so anything like that is like definitely going to be way more efficient, and use a lot less resource on Cardano than compared to doing it on Ethereum. Again, when you're moving native assets on Cardano, these are like not smart contracts. These are just native to the protocol. So it's a cheaper cost to do these simple things. Minting tokens is as simple as like, again, sending a transaction. It costs 0.17 ADA to mint an NFT on Cardano. Like, you talk to these artists right now on Ethereum trying to mint NFTs, paying 200, sometimes 300, because they don't, understand how to set the gas fee or when to do it at the most efficient time when the chain is not being, too congested. And it's like, wow, just come to Cardano. You can do the exact same thing. The experience is like probably 100x, better. And you're saving so much time and energy and cost. It's just like, why wouldn't you do that? So And you already started to see it.
I
It's a
was
shift.
thinking that. I was thinking that this morning, thinking about NFTs and artists. I was like, even if you want to sell an NFT now, you have to bake in
Right.
$100 gas fee.
Yep.
And even if you're like a third party person who owns an NFT and you want to sell it for a profit, you've got to bake in $100 in gas fee on both ends from buying it and selling it. So
Yeah. And then there's the storage. There's like, if it's a big file, if it's not just a simple like, GIF or JPEG,
mhm.
some NFT, music artists want to try to release whole albums on NFTs. You can't do that on Ethereum, right? That's just too expensive. Like you can maybe try to do it on Polkadot or one of these other chains like Cosmos, definitely Cardano, but you can't do some of these kind of more interesting and more complex NFT use cases. I don't think that they're going to be, viable, at least not Ethereum layer one, maybe some layer two, but
That makes a
but
lot
yeah,
of sense, and I never really thought about that. So somebody asked, and I get this a lot. I came up from I found Cardano this past year. Somehow I got in like under 7 cents, and just looking up Charles, I found Big Pay, I found some other people, and I just like the community. I like the thought behind it, and I just jumped in. But I'm new, so I don't
true.
know as much on the other end, and I get a lot from people. How's it going to scale? What's Cardano's plan for scaling when all these automated market makers come on and transactions start to fill up? What is the plan there with Cardano, and what's your conviction behind that? You know what I mean?
Yeah, that's a great question, and I think it's going to happen quickly. The plan is definitely Hydra. They've been working on this like layer two, like it's like Ouroboros Hydra. It's an extension of the consensus algorithm that will allow like stake pool operators like Big Pay to
Mhm.
basically run a Hydra node themselves. So essentially, it's like Big Pay has his own blockchain, right? And he can like settle transactions very quickly on that chain, and then essentially they all need to compile down to the main Cardano chain. But it's just like a very quick way to basically in parallel process a lot of transactions and computation data. And actually it's going to work well with smart contracts. Like a lot of people don't realize that like in Ethereum layer two breaks a lot of the composability across these smart contracts and the way they're built on the layer one chain. That's not the case in Cardano because of the way they're building Hydra, and it's like so integrated into the consensus mechanism and kind of just like building a layer on top of it. You're not actually sharding the base layer chain with Hydra. So it's actually a more robust mechanism. And I'm not like the person to like deep dive into the technicals. There's a research spec out there. I don't think it's finalized, but you can certainly take a read into that if want to get the full detail behind Hydra and how it's going to operate when gone live. But it's actually going to be a solution that any stake pool operator can run. And if you have you know 1,000 stake pool operators running 1,000 Hydra nodes, now you have just like basically all the scalability that Cardano could ever want to want to compete against a Visa, want to compete against, a Facebook or just any of these high transaction flow apps. It will actually have that ability. And these contracts like the Liquids, the any other DeFi protocols that are up and coming on Cardano, right? Any NFT marketplaces, you should be able to use these things no matter what Hydra head or node that you're actually operating on. So
That
it's actually going to be really interesting. There might be some like real super aggregation plays. Like when you look at layer two aggregators in DeFi, I think IOHK just signed a deal with Orion Protocol maybe yesterday. They do like liquidity pool aggregation. So if you want to get like access to a bunch of dexes and not just go through Uniswap, you can use something like Orion, right? And I think the point of Hydra is like you will be able to use Orion in the way that's is like even way more scalable because you're saying there's 1,000 of these nodes that are all like transacting and all basically settling these different transactions across the chain, even though it's a single DApp.
it makes
They can talk to
sense.
each other.
Yeah, they would like on their each, I guess, pool operator would have their own separate Hydra chain and then settle like batch settle onto the main chain.
Right, exactly.
That
Yes.
makes a lot of sense. That makes a lot of sense. So
And
that
talk and communicate with each other too, which is like the most key and like missing point of like Ethereum layer two solutions. Like they don't
abs-
talk to each other.
absolutely. So let's get into liquid finance a little more. What
Sure.
is liquid ramps?
Yeah, so Liquid Ramps is like a fiat on-off ramp solution that's saying, hey, we want to get US dollar into, ADA quickly through using a liquid interface, or we want to get Nigerian naira, through a centralized exchange into a digital version on Cardano. that can instantly, be deposited into Liqwid as supply. So
it's like
it's
a direct on ramp for fiat into
yeah,
cryptocurrency.
kind of. If you know what Dharma is on Ethereum, they've built out a solution that's like, it's like a part DeFi wallet solution, but it allows you to directly buy, any of these up and coming DeFi tokens, just through your kind of Visa or, MasterCard debit card. So you can, there's plays to have fiat on ramps in these DeFi, apps, and it actually just increases liquidity. It just increases, enter exit point for different users in different jurisdictions. So that's like kind of a longer term play. That's probably not going to make its way into V1, but it's really important, because it's saying that you're not a closed loop system anymore. You're allowing external users who actually may not even own any crypto at all, but want to deposit and mint some Q tokens and start earning interest, the ability to pretty easily do so through using something like a ramp, fiat on ramp.
Makes complete sense. It'll just help onboard people to the system a lot faster and easier.
Yeah.
And so with your version 1, are you looking to do like just lending products and things from there? It'll be like a deposit and
correct.
lend.
Yeah, the version 1 is just going to be for suppliers and borrowers, right? So if you supply, there's a floating interest rate. Each block is determined by the amount of borrowers in that market, the amount of tokens that have been minted, and the interest repaid on those outstanding borrowers. So yeah, there's basically the way the system works is an over collateralized lending facility. So if I come in and I supply 100 ADA, I have a collateral factor, kind of like a risk weight that's tied to each of my tokens that I've supplied, and it determines how much I can use of that supply as collateral to open a loan. There's a borrow limit set. If I go over that borrow limit, I'm risking liquidation. There's a whole model for how we're doing pooled liquidations and a security module tied to the LQ token, to basically allow the LQ token holders to be the liquidity backstop when we need to have those liquidation events. We can draw onto this security module, basically a staked LQ smart contract that says, this is the logic to liquidate. We take the liquidation bonus and we share that revenue amongst all the LQ holders who've deposited in the security module. So yeah, there's a complete ecosystem that we're building, and the key users are like, the borrowers and the suppliers, essentially. We think of, third-party users like the developers who are going to build actual third-party apps and, integrations into Liqwid, using our SDKs and APIs and things like that. We think about, you talk about targeting Africa and what that takes beyond just transaction fees on Ethereum. There's this whole notion of identity that's just completely missing. And like you talk about entering some of these places, you can't even have conversations if you don't have a solution to do identity, to do KYC, to do AML. That's going to, make the lives of these central bankers and regulators a lot easier than it is today. Atala Prism, AtalaPrism.io, if you want to check that out, that's Cardano's solution for doing identity. And that's something that we're going to integrate with directly after we launch, our just basic open source liquidity pools for lending. In many ways, the V1 is going to look just like an Aave or a Compound. A little vanilla and not very capital efficient is what I like to say, because it's just, everyone has to come in and collateralize a position to be able to open a loan. But in the future, actually what we want to do is, create products around credit, using Atala Prism for identity, secondary market offerings around insurance. These things will allow us to create much more capital efficient products. We could even think about using different NFT tokens to do things like mint, a credit score that actually unlocks some credit line for a user who might actually not even collateralize that loan position. But since they've gone through maybe one of our, KYC, AML, kind of financial chartered, integration partners, and the system that they have already in market today, they have the ability to tap into liquid liquidity pools at near zero collateral. So that would actually be, a really cool future feature. And these are the type of more capital efficient things that we want to move towards in targeting Africa, in targeting India and Southeast Asia, in targeting South America. It's a global platform and solution. So it's like what works in one place will work in many different jurisdictions, but you have to get the V1, just the basic liquidity pools on chain, the robust money markets and the ability for the interest rate curve to handle everything based on supply and demand. Like those are the heads down logic and functionality that we're focused on developing right now.
The building blocks. It makes so much sense when you say it like this, and we're bouncing around, and I love it because you're touching on all of my questions already. You're too fast for me. But I love where you're going. No, you're good. I love this. You're touching on so much stuff, and it's all extremely interesting, and that I want to learn about. And I am interested in like that credit system and things like that, because I always say the internet would be such a better place if everybody had to tie their name to what they're saying, So,
well, this is the thing though. So I actually, I'm glad you said that. I want to caution like including identity with like not having privacy, right? Because privacy is like this core ethos of crypto, and like when you look at the cypherpunk movement, it's all about like being able to control your funds, separate money from state, but also control your privacy and your data, right? The information you produce on the internet. And I actually, one of the coolest things about Atala Prism is that it's privacy preserving. Like with ZK proofs, zero knowledge proofs, you have this ability. So a simple Alice to Bob transaction, and they've actually implemented this in the country of Georgia. All of the college credentials essentially gets recorded on this like Cardano hyperledger, like private version of the Cardano blockchain. Essentially, it's called Girolamo, I think, and it's where Atala Prism is like sits on top of. Essentially, what's happening is if I'm Alice and I've graduated from a Georgian university, I have Atala Prism as a mobile app on my phone. I have all of my digital records, the college I went to, the year I graduated, if I was honors or basic or whatever I graduated with, and all of my information, my coursework, blah blah blah. I can attest to Bob any single piece of that information. The year I graduated, my course studies, how I did in these courses, without ever giving up my name, without ever giving up, certain pieces of key information that I actually want to retain. And then actually, because of the ZK proof kind of like validator script that comes along with this transaction to Bob, he actually has, cryptographic and, mathematically secure proofs that say, hey, I am Alice, this is my, college degree. This is everything that I've done. You're not going to get my last name. You're not going to get the year that I graduated. You're not even maybe going to get my full name, but exactly I am, the person who is honestly sending you, and only I own this piece of information. To me, that is like, that's
huge.
Complete privacy and being able to attest to all the data that you own. So it's like, yeah, you can have identity and also have complete privacy, alongside that identity with ZK proofs. And that's like something that they want to implement for, I'm pretty sure, Catalyst voting on Cardano. So if you think about, that ability, tying an Atala Prism wallet to the Catalyst voting process, and then, maybe making certain pieces of information, public through using a ZK proof, and retaining certain pieces that you just don't want public. That's the coolest thing to me. And then again, all of these governments, they agree that Atala Prism is this Web3 DID standard. They want to use it for KYC and AML. It solves a lot of their pain points, a lot of their overhead and time and cost and just stress is all around trying to implement KYC and AML, which, on Ethereum, they have zero chance of doing, because there's no standard around identity on Ethereum, or reporting things like KYC and AML. So yeah, it's a big ambitious solution what Cardano is doing. I talked to the Atala Prism, product managers, and we're even under NDA with them right now, and we're trying to see what the full design space looks like for like implementing existing production apps into Atala Prism, and then building something like a Liqwid potentially into that, and what that actually resembles. But it's definitely a really exciting path, because it represents such a touch point into the real world, and like real users will have government mandated solutions around Atala Prism built into them. And I'm sure they're going to announce something in Africa and Ethiopia and places like this pretty soon. It's only a matter of time. So I definitely think Atala Prism is going to drive a lot of users to Cardano, probably much more than the market's currently pricing in.
That makes a lot of sense, and you actually answered one of the chat questions. I assume with that is, that's how you plan to commit to KYC, AML, FATF compliance, is using Atala Prism, I would assume.
Yeah, well, so the thing with Liqwid is actually we don't have any like of those. So this is the thing, like Liqwid isn't, you're not swapping assets. This isn't like a DEX, like this isn't like a Uniswap. This is a borrow lending system. This is actually for users who don't want to sell their assets. And we're not, and it's an over collateralized system at that. So you're not saying, you're right, to do things like zero collateral lending, you absolutely need like financial licenses. You need KYC, AML licenses and charters and all these things depending on wherever you're located, right? But for what we're building with Liquid V1, actually, you don't really need those things. It's more of you need to audit the protocol. You need to have secure contracts on chain and things like that, like protocol security basics. But there's no like financial licenses or KYC, AML, kind of regulatory requirements on Liquid. And yeah, that's again, that's a product of being not super capital efficient in what the V1 system is actually doing. And again, the world that we want to move to in the future is working directly, kind of like a white label product integration with some of these companies who already have the KYC and AML licenses to introduce things like zero collateral lending and have these products in market today, actually. So, yeah.
That makes a lot of sense. And I love the vision, not only for Cardano, but yourself with Liquid, like having that long term. We want to win the sprint race in the future, but we're learning how to crawl and walk first and not
Right.
just trying to run before we know the basics, you know? And that's what really drew me into Cardano and the team around it. Like, I like the slow pace. I love the peer review of all the papers and everything like that.
I agree. I think it's part of the process. It's what makes Cardano so different than pretty much everything else on market. I mean, there's Algorand and a few other chains that I think take a more academic approach, but like, wow, when you look like top to bottom and like you just like look at the team behind both IOHK, Emergo, who are unsung heroes in my opinion, but also the Cardano Foundation, and they've really picked up the pace since a couple years ago, and what they're doing nowadays in terms of pushing out partnerships, pushing out updates. I mean, I think that they have some real things hidden up their sleeves for, when Alfonso drops, and people are going to be pretty surprised by like what the foundation's actually been working on this whole time. So yeah, there's like three legs behind this Cardano beast, and the whole community. You look at Catalyst, like it's really like the community has come alive, and the fundings are only the rounds are growing in nature. They're doubling almost each round. So you're saying more challenges, more developers, more entrepreneurs coming in each 6 weeks, vying for different funds and projects. And eventually we're going to have 3 to 4 funded NFT, marketplaces. I think the first one just got funded, right? So there will be like, all the optionality that you'd want in terms of NFTs and DEXs and DAOs and all these cool things that you'd want to kind of construct different business models and apps on top of Cardano. I think we're going to be surprised to see how much of that just gets funded by the community.
Yeah, I think it's gonna grow a lot quicker. I'm like scared. I look at all these other trades I want to make, but I'm like scared to move any of my Cardano. It's not going anywhere. It's locked up. It's locked up. I just see everything going and moving, and it seems super interesting. So, where is Liquid Finance?
Yeah.
Where is the company based out of? Like, where are you? Where do you? I guess is it a company, and where is its like governance based? Like, is it American
Sure.
based company
Yeah.
or?
So Liquid Labs, we're based in Wyoming, shared in Wyoming. Just was an obvious play. They have really crypto friendly, tax laws. Shout out to Caitlin Long and all the work that she did there to get Wyoming to the place it is now, in terms of it's almost like the national place to be if you're a crypto fintech startup. There's a whole regulatory sandbox that they've introduced in Wyoming, for fintech kind of crypto startups like Liquid Labs. So it's definitely a great place to be, and a great place to do business, really. So yeah, we're established for the last 2 or so months there, and there's a Liquid DAO that's tied to the protocol. That's actually very different than us as an entity. Us as the maintainer of the protocol, Liquid Labs is going to build the V2. We're going to build future product integrations. We're going to work with existing companies to build integrations into their systems, connecting our APIs to theirs essentially. But Liquid, and the DAO on top of it is more saying this is the community governed protocol. This is the ability to update the smart contracts, any parameter within the contracts, actually vie for different funds, because LQ is just a native asset on Cardano. So it'll inherit all of the governance features of ADA, meaning the on-chain treasury that you get with ADA, you'll have as well with LQ. And, we'll have the ability to vote on different proposals that get introduced. Potentially, I've, talked to some people, knock on wood, we might even be able to use the same Cardano Catalyst platforms, like, Idea Scale, maybe even, to have, Liquid proposers introduce their ideas, ask for funds that are, tied into Liquid DAO treasury, essentially. And then the whole community of LQ holders has voting power, just like in ADA, right? And you get to vote on these proposals, you get to upgrade things, you get to basically govern the entire future, value and growth of the system, the same way we're kind of doing right now with Cardano through Catalyst. And that's kind of like the two legs of the governance. One is saying, hey, this is a pretty traditional route in opening up like an entity in Wyoming. And in many ways, you kind of need to do that if you're doing business, in America. And I'm an American founder, so there's liabilities and different regulations that say that this is the route. But the Liqwid DAO from day one, and being a community-led protocol, we're having a fair token launch, meaning there are no early insiders or VCs in this token at all. Everyone who gets LQ at the first moment of providing liquidity to the protocol on Plutus, that will be the first time anyone, including our own core team, has access to the LQ tokens. Right now, they're just sitting at the address, in our ledger device. The same day that they were minted, they were, deposited there and haven't moved. So it's like, the thing is, the protocol itself is launching in a way that's going to directly incentivize the community to run with it from day one on chain.
That's
And
beautiful.
yeah,
I get
it's
that
it's a
question a lot. Like, how can we get LQ token? And that. So you're saying the only way anybody's getting it is by staking to the system and providing the liquidity that the platform needs. So you have to be a participant in the system to get the token.
Yeah, it's the main two ways that you can earn the token for essentially not paying for it, right? Of course, there'll be dexes and it'll get listed on, I'm sure, many Cardano dexes, and you'll be able to buy it if you want off of that. But the whole point of like these Ethereum DeFi protocols and what yield farming has actually done, and fair token launches kind of mean for the future of these systems, you can distribute your governance and bootstrap liquidity at the same time, right? Like you can kill those two birds with one stone, and you do that by having a fair token launch where you're essentially giving away majority of the governance ownership directly to the community of early liquidity providers. Now the difference between like what we're doing and what you would see on classic Ethereum DeFi is like they have 10 to 20% set aside from their VC early insiders because they've already raised. No, you're good. They've already raised
Sorry.
some amount. So you got early VC insiders, you have diluted token mechanics, you have um, essentially teams that are only giving away like a very small percent to the actual community who are providing liquidity and staking, and the majority going to like either the core team or the early VC backers. With Liqwid, 75% of the tokens are essentially directly accruing to the community. 10% from yield farming over the first 6 months of launch. The user distribution is going to release 60% of tokens over the first 2 years. And the DAO is seeded with 5% of LQ, which, like I mentioned earlier, anyone who has some threshold of LQ will be able to introduce a proposal, draw funds from the DAO, which again also replenishes itself with some of the protocol revenues, and either introduce a new project built on top of Liqwid, introduce new code or new contract update, new parameter changes, things like that. All through just having community governance tied to the actual token itself. This is something that in many ways is trying to make its way to Ethereum. Like you look at Barnbridge and some of these up and coming Ethereum protocols, I definitely think they're getting better at like understanding what the true fair token launch should look like and trying to complete that vision of not having a ton of early insiders dilute the equity of the token essentially, but they're still very far away from it. And even some of the things I see launching on Cardano, I'm like, why are we still talking about ICOs and pre-sales? Like there should never be a pre-sale or an ICO for a DeFi protocol, in my opinion. It's so 2017 Ethereum. It doesn't even make any sense why you would do that. It's like we've proven that this model of actually bootstrapping liquidity and distributing governance and actually bootstrapping community, because at this point the token is the community, right? I don't buy anything else, and it's why we saw the whole Uniswap SushiSwap case study, right, where essentially SushiSwap came out with a copy paste of Uniswap, forked the token, introduced a token that Uni either had plans to introduce but hadn't done so, and overnight like 50% of Uniswap's liquidity went to Sushi, right? And to this day, SushiSwap produces a ton of fees and is like a viable DEX player for the foreseeable future in Ethereum. And it's because they did things. They shared the token with the entire community from day one, right? So they had no early insider VCs, right? Because they were kind of a community-led protocol from the start. And that was like a real case study in terms of, wow, there's people that will back these community-led protocols instead of backing these like kind of massive VC-backed teams. But it's just interesting to see how these things are evolving. And to me, to still be doing an ICO or a pre-sale or even a token sale, it's just like really like you're not you don't understand where we are at compared to where we were in 2017, in my opinion.
Right, a lot has changed. I say that too a lot about a lot of things in cryptocurrency. Everybody wants to compare like this bull market with 2017's bull market, and I think we are in a totally different atmosphere than we
Yeah.
were 3 years ago. Like you see all these big players getting in. I don't think like everybody's like, "Oh, we're going to have a huge crash at the end of this." I believe there's going to be a run up and we will have a pullback when the
Right.
hype ends, but I don't
Yeah.
think we're going to go into this multi-year bear market freak out because you have such big players getting in the game, and it's not just Bitcoin anymore. Like it used to be everybody was like Bitcoin only, and now you're seeing some of these big content creators and just people in general, in social media starting to
Yeah.
push Ethereum and other coins, and I don't think it's going away. A lot of these big corporations aren't going to let, Tesla's not going to buy into Bitcoin and then just let it fall to $30,000 again and not be a
Right.
buyer and put a floor in.
Right. And you said it, like there's that institutional shift that has to happen at some point. It's like it's not even that, like, we one need the volume from these institutions, but it's more like the political almost kind of mindset of like 2017 they wouldn't touch us and kind of central bankers laughed at it. Now Elon Musk is putting his Tesla, account reserves essentially like into Bitcoin. Like, they're buying Bitcoin by selling Tesla cars. So you have to like think of that. Every single CEO, CFO in a Fortune 500 company is now looking at their entire system and saying, what are we doing wrong? Look at MicroStrategy. Look at what Tesla's doing. Look at all of these other companies creeping up. Square, for example, Fortune 500 companies that are, you know, essentially holding their entire or most of their account, reserves in Bitcoin or Ethereum. So it's going to get to the point where, there's going to be almost like a shift. It's like so slow and then all at once, right? And that's what's clearly happening. And when you have someone like Elon, who's such like a super bull and like publicly, just really vocal about it, that every single CFO is now on the hot seat from their core investors. Like, yo, where's our exposure to Bitcoin? Like, we want exposure to crypto. Look at the upside of these things, right? Like, so
Absolutely.
there's that kind of institutional transformation happening in the background.
It went from like the guy in the boardroom who brought up like maybe we should try Bitcoin got fired
Yeah,
to the guy now who's like, I don't look at I'm not doing that. Like if you're sitting around in a boardroom right now and you're not worried about putting Bitcoin on your balance sheet because you
right.
look at the record of Tesla made more money on their Bitcoin than they did selling cars. You look at
Yeah,
what's his name and Master and that stock just flying. You look at PayPal, Square, all that
yeah,
stuff. It's almost forcing you to have the conversation in the boardroom. And I
right,
think it's flipped. If you're the guy in the boardroom now who's like, no, I don't think we should ever do that. I don't think
right.
that's healthy for your career.
Yeah. No, I completely agree. Yeah. It's crazy. The bankers are gonna have to do something actually soon. They're gonna have to provide some value.
Yeah, absolutely. So a good question from chat is how do you guys prepare to pay the exchange fees to get LQ listed? Or,
Yeah. I'm not sure that, we're gonna pay any exchange fees to get LQ listed, to be honest. I think that there are going to be, like I said, several Cardano dexes that are very sufficiently liquid.
Mhm.
And, we'll have all of the volume needed to trade normal amounts in and out of LQ, just like there's Uniswap and SushiSwap and Bancor and all these other dexes on Ethereum. Those are going to emerge on Cardano, and I'm sure LQ will be listed there. We'll help in that process and provide early liquidity to some of these dexes if we need to. But we're not focused on like trying to get centralized exchanges onto LQ. I think that as we become a protocol that captures value on Cardano and generates transactions and fees, the exchanges will have interest in listing us because we're one of the first DeFi protocols doing this on Cardano. I don't think that that's something that we're going to have to pay for. We have a securities attorney who we work with, and I'm sure we'll have all of the disclosures and terms and things that the exchanges need to list us, and we'll work with any exchange partners at the foundation or anywhere else to kind of get us listed on exchanges that are interested. But yeah, it's a Cardano native token, so it's just they can list us whenever they want because if they list ADA, they can list any other token on
That's
Cardano
on it.
essentially. So yeah,
Love that. I love that answer, actually. So, as a small pool operator, and I mean tiny, we're not even getting our block every 5 days. we're
same,
we're tiny out
same.
here. Same. All
Yeah,
right.
yes,
Wow, that
sir.
That's good to hear because I look at Big Pay in them and I'm like,
Yeah,
the dream
I'm
right
jealous.
there,
Yeah,
right?
yeah,
So, but how can ourselves, myself, and a small dev friend, and our channel here, everybody watching who's involved with Rare Pool, with the Babel fees coming in, it's so interesting. Like, how do we work together
yeah.
and ensure that our pool is working with Liquid when it comes out, and then that we're able to accept it?
Yeah, this is a really interesting, like again, Cardano native feature, these Babel fees. And I think for a lot of smaller, stable operators, even like I provide liquidity for Cardano 24, and our CTO Holger runs the actual pool. And it's definitely, as a smaller stake pool operator, it's like, how do you actually produce an edge, right? And the Babel fee seems like one of these ways to actually stand out from the crowd, and actually do some things that will, kind of market yourself and provide like a mini dex, like I said, to your kind of stakers. So what you would actually do is essentially, if you have a transaction that's been paid, or wants to be paid in another token, say LQ, you would then actually have to almost like maintain a mini balance sheet yourself, where you have, a liability in the token, the native asset that you've, basically accepted, and you have this asset ADA that you're going to then use yourself to pay a transaction fee. So now you can basically create like a mini swap with all the liabilities in these native assets that you accept. LQ, any other DeFi tokens that you think are interesting and want to, kind of have in your balance sheet. And then as long as you have, as a pool operator, the ability to pay those transaction fees in ADA, I'm assuming what's going to happen is you're just going to end up accruing a lot of these other tokens like LQ and any other tokens you accept. And then your users will be able to kind of swap in and out of ADA and those other tokens, maybe, or even simpler, you could just directly, give your users those other tokens like LQ. So you could provide like an ETF service almost, because now your users are getting ADA staking fees, and they're also getting this, small but probably meaningful over time amount of LQ in the transaction fees that you swap into, and kind of accept. I could be way off there, but that's my current understanding of Babel fees right now.
Right. And the dream for me, just thinking about it last night and doing my research and listening to you and other people talk about it, is like, I wonder if that helps a small pool like ourselves. Like, if we're saying we're willing to take, we're willing to process LQ transactions and take them as fees. If there's less pools willing to do that, will that help us mint more blocks than what
I
we're
mean,
doing right now? I
well,
would hope.
yeah, it'll so it's all around the stake control. It'll help you grow your stake, I think. It'll help you attract more Cardano users, especially with like multi-delegation. I think I just saw SIP to do like a standard multi-delegation portfolio. Like there's things coming to Cardano very soon, to dataless in your Roy wallets. It's going to make it really easy to delegate to multiple pools like Bloom Pool, Rand, Cardano 24, sorry, Rare, pool all at once, right? And not have to kind of really think about it the way you do today when you like set up a new wallet. It's kind of tedious to like stop staking with Bloom Pool and then try to, stake 10% of your holdings in another pool. You kind of have to set up the wallet. You have to send some amount to it, stake with that pool for 2 epochs. You don't want to send it all there, else you're going to lose, a couple epochs worth of staking rewards. So yeah, there's like a whole like tedious path you have to do now that you won't have to do in the future. So it will become easier. And then having like Babel fees to say, hey, we're now, also offering all of our stakers these LQ kind of transaction fees that we're accruing. That's just going to set you apart, because now anyone who wants a drip of LQ, like kind of like an ETF almost, and they don't want to actually have to engage in the protocol, they can just engage in any of the stake pool operators who are accepting transaction fees in that token. So it's just a nice way to diversify yields, diversify streams and risk, really, if you're an end user who doesn't want to directly enter the protocol for any reason. Yeah, I think there's other things too coming. Like there's going to be a KEVM sidechain at some point, a yellow sidechain, all the other things. I think as a smaller stake pool operator, you'll be able to run these as validator nodes the same way you're running a Cardano stake pool essentially, and almost like accrue, you'll be paid ADA, I'm pretty sure, for validating transactions on these other sidechains. So I think there will be, a couple different ways for smaller stake pools to kind of, earn additional income yields beyond just, making blocks on your Cardano node, essentially.
Yeah, that's amazing, and my mind's like already turning as you speak about all the different ways that this could possibly potentially help grow the pool, and and
Yeah.
help other small stake pool operators, because I see it's a big, it seems to be an issue. Like I even get contacted by other content creators like, how'd you start your pool? And I'm like,
Right.
the biggest issue I see, number one, it's all about marketing, but the biggest issue is having enough ADA in your pledge or delegated to the pool to be
Right.
minting blocks to keep people in your pool. Because what'll
Yep.
happen is people come to, they find out about ADA through my channel, they hop in our pool, they go do a bunch of research, and then just like they can't wait. They get antsy. They're like, no, I want them in a block, and they go to where a block's getting minted every 5 days. You know what I mean?
Yep. Yep.
And that's a lot of the issue with the growth on our end of things. And I think working with LQ and these other native tokens, I think will really help. And it's something I want. My mind's also racing to the point of Cardano is great with this voting and everything like that and governance. And all of a sudden, when you say this, it makes me think, wow, Rare Pool needs a governance token, because we need to. I feel like the delegates need to have a say in if we do take on LQ as a something to process, or any other token. I mean, I
Sure.
want it. I want LQ in the pool regardless, but but
Sure.
like in the
Yeah.
future, other coins, I feel like the delegates should have a say in that. So it's
100. I
interesting.
mean, 100%. That you mentioned. That's like what we'll do in Liquid. We'll do that exact thing. Like when you want to like create a new market, there's like a contract function for that, like make market, but you have to like vote on that first. Like you have to, does everyone want that token to be there? What should the parameters, the collateral factor, what should the liquidation close amount be for that token essentially? All these things that you need the community's input to kind of do before you introduce that token at all, that's all done through like the governance token. So yeah, I definitely think pool operators will come up with their own governance token, especially with Babel fees get hot and like you have like a true like mini Uniswap. Like if Bloom Pool, for example, with the amount of transactions that they settle, probably across all their pools, if they wanted to do a Babel fee operation, they could probably accrue like near DEX, medium to small level DEX liquidity, in terms of their balance sheet of the native assets that they hold on their sheet. So it's like that's something that's going to be a whole new model just on Cardano, totally unexplored. We have no full understanding of how it's going to be implemented or what it will look like on chain, but we do know that if it's a mini Uniswap and these pool operators can either take fees or just directly allow their stakers to earn that token that they're accruing on the liability side, that can be like a powerful model for anyone who's like a small or large stake pool operator, in my opinion. But we'll see.
Absolutely. Let's get into a little bit of the future here. When do you think smart contracts drop? You probably know more than most, and you obviously don't have to say what you're not allowed to. But like, when do you think version one? What's your future timeline looking like for you guys that you're
Sure.
allowed to talk about?
Yeah. We can talk about everything. I know as much as anyone else, actually. I don't work at IOHK or affiliated. So when I find out the news on the Cardano 360, that's when everyone is finding out at the same time. But yeah, I think that there's a private testnet that we're trying to get involved in with our M Labs Haskell developers who are building the Liqwid contracts, trying to, like I said, work as closely with the IOHK Plutus delivery team as we can. And they've done a great job. Shout out to Ben O'Hanlon. He's a really awesome facilitator at IOHK and make sure that any of the technical questions our Haskell devs have are answered pretty promptly. There's a DevNet Slack channel that we use pretty often, and we're in all of the weekly calls to get all of our Plutus contract questions answered. We're trying to launch our testnet app in the next couple of weeks here. 2 to 4 is like a really, really rough estimate. And, we're not putting out hard dates because there's a couple of things that we're still figuring out on our side. But once we do that, it's really just an iterative process to get us towards that Plutus mainnet production ready state. There'll be a final protocol security audit done on that sometime in like mid to late July. And we're just kind of heads down pushing towards that moment because that's when like for us the real code freeze is, and we're then ready to make the final adjustments following the audit and launch at the same time essentially that Alfonso has the hard fork. So late July, early August, mid August, if things get pushed back. That's kind of like the timeline for us right now. So no hard dates. We don't want to do that and then let people down. There's a lot of uncertainty and things that still need to be de-risked, and that's part of the process of one, being early. Two, we're trying to mitigate that as much as possible by working very closely with the IOHK devs and the Plutus project management team. And yeah, it's been successful so far. So I think it's just continuing at this pace. It's heads down. It's sometimes it's not as sexy as like all the NFT raves and all the cool things happening on Cardano right now, and I get that. Like, people want to like, see and feel and touch things today, but building a whole protocol like this, on the budget that we're operating on, like, I was on a podcast this morning with Paul, the trader from Cardano, great guy, and we were just talking about like Aave and Compound and some of these other teams and the amount of VC funds that they actually raised before even like, a line of code essentially was written. And it's essentially building a similar protocol on a fraction of that budget, in this UTXO unexplored design model of Cardano. And we're having a blast at it. Our Haskell devs are very committed to V1 and beyond. They're passionate about Haskell and Plutus. They want to work closely with IOHK, and IOHK actually has been really good on the feedback side and just like, making sure that the Haskell devs who have the experience and ability and want to work with them actually, get the chance to do that. So yeah, it's been a win-win working, with this team and with IOHK, and we're just kind of heads down right now.
That's amazing, and I like what you said about NFTs. I was saying it all morning in the past like few days and weeks. Is I think people that are getting excited with this NFT craze, they're missing the forest for the trees. Like NFTs are hot and they're sexy right now, and everybody wants artwork and all this stuff. But the DeFi revolution that's happening right now, that's a lot quieter, is much larger,
Right.
much larger.
Right. And
So
much more, I think, ready for innovation and disruption. Like, I don't know, you look at the total addressable market for traditional, like actual TradFi and the products that they've introduced, interest rates, derivatives, options, all these things that are being produced in Ethereum DeFi today. And I kind of liken it to like mainstream is probably going to, come for the NFTs and stay for the DeFi. That's probably going to be like the path to like real mainstream adoption. And, hopefully it happens on Cardano first. Like none of these blockchains have actually seen mainstream adoption where you're talking about like a billion users have actually touched this system before. So if that's like the real plan and path, and Cardano keeps saying, we're going for number one, like to me that is 100% where you have to be on pace to do if you're talking about truly trying to go for number one and disrupt everything in the crypto world that we've seen up to this point. But yeah.
absolutely, man. Absolutely. Dude, we filled this hour so fast. Where can everybody, before we wrap it, where can everybody find you guys, keep in touch with Liquid Finance, and
Sure.
pay attention to what's going on with yourself and, the
Yeah.
company?
Yeah, absolutely. Great question. So we have three official sources: our Twitter, our Medium, and our Discord. We do not have a Telegram. So if you see anything for a Liquid Telegram or anything regarding a pre-sale, it's a complete scam, and please stay away. There is no pre-sale happening. If you look at our website, liquid.finance, Liqwid, you can check out all of our information, our frequently asked questions, our white paper, the recent proposals and idea scale. All of our information is up there. And I'll share those links with you, so you can kind of post those for your community.
Absolutely. And this will all get turned into a YouTube video, and we'll put that down in the description
Cool.
below.
Great. Look
Man,
forward to it.
I really appreciate you coming on today. I learned so much as a new person just diving into DeFi in the past couple months, and I'm trying to learn on Ethereum, and I'm so excited for Liquid on Cardano. Every day I pay a fee with my Ethereum or have to deal with having to have Ethereum to transfer two other tokens. I
Right.
just think of Cardano and Liquid Finance. So I'm excited for the future of what's going on, and I really appreciate you coming on today and taking the time to explain all this to us. And hopefully we'll
Yeah,
do it
man.
in the
Thanks for
future.
having me.
Yeah.
Yeah, 100%. Thanks for having me. Our team is, really thrilled, and we're, shout out to this entire Cardano community for backing us in Fund Three. I think it was like over almost $1.92 billion that backed our, DApp proposal, and it's just like we're overwhelmed and super grateful. And I promise you guys, we're heads down, and we have 7 Haskell devs locked in a Slack that are doing nothing but Liquid contracts from now until mainnet. So yeah, we're excited.
Amazing, man. One last question. Are you gonna any plans for any live events? I'm going to this Bitcoin 2021 in Miami in June. It seems like
Okay.
it's going to be full of a lot of
Yeah.
people. I told Pay about it. Pay is going to be there. It's not. It seems like it's just Bitcoin. I mean, you got like Michael Saylor and some people talking, but I have a feeling on the bottom end of things, when you're on the trade floor, I have a feeling there's going to be a lot of different discussions going on. So I'm interested to see any plans like that, any live conventions or anything for Liquid.
Nothing yet. I mean, we're definitely looking forward to the Goguen Summit. I actually have heard of that Miami, blockchain event too. I think there's a lot of hype around that as well. But yeah, no, we're looking forward to the Goguen Summit. We don't have any other live events planned right now, but like I said again, heads
When's
down, building V1.
That's what's up. When's the Goguen Summit? I've never heard of the Goguen Summit.
Oh yeah, so that's unannounced, but I'm sure at the end of April, some point in May, they'll actually announce a
A
hard date
date.
for the summit. But every time there's a new like major release, like there was a Shelly summit, there should be a Goguen summit. There should also be a Voltaire summit at some point, but I'm not gonna look that far in the future. But I definitely know there's a Goguen summit coming up, and all of the funded Catalyst proposals that are building dApps and things will have the opportunity to come on, demo their platform, and show what they've been working on for the last couple months. So yeah, we're really looking forward to that.
That's amazing, man. I appreciate the time today, and I look forward to speaking again in the future.
Yeah, thanks for having me, man. Really appreciate it.
Yeah, have a good one.
Cheers.
See you, brother.
See you, man.
Thank you for watching the YouTube videos. We really appreciate it. Don't forget to hit the thumbs up button, subscribe, comment down below, help us out with the YouTube algorithms. And we're live 5 days a week on Twitch, 7 a.m. to 2 p.m. EST. Come check us out. Thanks for watching.